The frontrunner, according to the polls in the Republican presidential race, Donald Trump, has unveiled his tax plan. He says it would eliminate taxes for some and lower them for the rich and for businesses. He claims that his plan would increase overall tax revenue. On the KOGO News Live line to talk about the Trump tax plan is San Diego State University accounting professor, Dr. Nathan Oestreich. Dr. Oestreich, thank you so much for your time.
My pleasure.
Let's talk a little bit about the tax plan. He said he's going to lower the corporate tax rate from 35% to 15% and lower the highest income tax rate from 39.6% to 25%. Now, a lot of people have complained already today. He said, well, that sounds like he's favoring the rich.
Sure does.
Is that the case?
It's difficult to argue that he's favoring the rich because the tax cuts would be across the board if these were ever to be adopted. Many of the people with incomes under $25,000, that would be married couples with income under 50 would pay zero. I shouldn't say many, I should say all of them. Today, many of them pay zero already, but there are some who are paying tax with that level of income, and they're going to have a zero tax bracket. And then we go to 10, which is a lower rate for people, individuals between 25 and 50,000, which would be married between 50 and 100. The next one, it's also a tax cut, but it's the 20% bracket, which would be for individuals between 50 and 150. And they would lose approximately 50% of their deductions other than mortgage interest and charitable contributions. So that's going to remove part of the benefit of that 20% bracket. And then over 150 for individuals, 300 for married couples will hit the 25% bracket, which is a savings, but they're going to lose almost all of their deductions, except for the charitable deduction and the mortgage interest deduction.
How important are deductions to people? I know a lot of people take them.
With a Southern California mortgage, say that you had a $25,000 mortgage interest deduction, and you were in the 25% bracket. Your tax goes down by 25% of that.
So it's going to be costly to some, especially those with that are taking that mortgage deduction. Overall, when you looked at the plan, does it make sense? Are there things that could be tweaked to work better?
Sure, I'll address a couple of those with you, but to be clear, we don't have enough details to do any detailed analysis.
Right.
But let me hit some high points. Number one, as I went through those tax brackets and I was comparing individuals to married couples, the marriage penalty that we have today, at least the part of the marriage penalty that's in the tax rates, will be gone because a married couple would get double what two unmarried individuals get. The alternative minimum tax, he's proposing to get rid of it. How welcome will that be for those people who run into a tax that's very difficult to plan for?
Yeah.
Sometimes you don't even know you're going to owe it until you do your tax return, and it's too late to do any planning. And, the corporate tax rate dropping to 15% is substantial. People have been talking about corporate inversions, and some corporations have been doing it, and that's when a corporation revokes its charter in a U.S. state and reincorporates in a foreign country with a more attractive tax rate. And Trump is talking about reducing that to the corporate rate to 15%, and he says that it would remove the incentive to do those inversions. He's probably right.
All right. This is San Diego State University accounting professor Dr. Nathan Oestreich with us on the KOGO News Live line. Doctor, thank you so much for your time. I sure do appreciate it.